Headlines at 4 p.m. ICICI Bank chairman disagrees with the government's 5% forecast for the current fiscal, says India's GDP growth is unlikely to fall below 6% as manufacturing and services have started showing signs of recovery. M&M's third quarter revenues crossed 10,000 crore rupees on the back of high demand for diesel SUVs, but high raw material costs drag profitability. And AV Birla Group flagship HINDALCO sees a 4% fall in profits in line with street estimates. Final guidelines on new bank licenses may be released anytime soon, says RBI Deputy Governor Anand Sinha. Real estate companies and broking houses keep their fingers crossed, hoping for a green light. Bharti Airtel's Deputy CEO and MD Akhil Gupta of Bharti says telecom tariffs will rise from current levels on the back of higher input costs. Also says the company is yet to take a call on participating in the 2G auction. The European Union moves closer to a historic pact on budget cuts. British Prime Minister David Cameron, who had sought steep cuts, claims victory after the European Council President proposed a £34.4 billion sterling cut over the next 7 years. A very good afternoon and welcome to Business Day. I'm Sonali Krishna, and straight to our top story. A day after the government dealt a shocking GDP growth projection of 5% for FY13, KV Kamath, chairman of ICICI Bank, feels that given India's growth scorecard, the 5% growth projection is unrealistic. Kamath adds that he believes that India's growth rate will not fall below the 6% mark, but does caution that getting back to 9% levels will remain a challenge.
If I look at the economy today, other than the infrastructure piece which was yanked out, other things have not fallen off the cliff. So we have manufacturing which is investing for growth because they have sufficient cash accruals to invest for growth. They don't come to banks, but they do it. The service sector companies which again are investing cash surpluses for growth, they don't come to the banks. Rural India, which is happening, banks are lending to rural India. Agriculture, which is also happening, banks are lending for agriculture. So one wedge of the growth piece is off, clearly, and that's infrastructure. But other wedges are in place. So I think given our track record over the last 12, 13 years, I would think sliding below 6% is difficult. So I may not agree with the number below 6%. Equally, going back to 9% immediately is difficult because the pieces that have to be there for infrastructure to take on are still not worked out. When they are worked out, we'll get back. But it's at least a year and a half away.
And straight on to an ET Now exclusive. Just days after getting an earful from the Supreme Court, market regulator SEBI has begun the process for freezing bank accounts of Subroto Roy-controlled Sahara Group to facilitate the refund of 24,000 crore rupees to investors. Vijay Ganeshan Iyer is standing by with the latest. Vijay, over to you.
Sources are clearly indicating that SEBI finally has set the ball rolling and is getting tough on Sahara Group companies. What we gauge is that SEBI already has dispatched letters when it comes to freezing of bank accounts of Sahara, explaining the banks wherever Sahara has got accounts, saying what is the background to the case, and they're just following the Supreme Court order and why it is important to freeze the accounts so that the investors could be refunded. Having said that, we need to understand that, as you're rightly pointing out, Supreme Court just a couple of days back had even pulled SEBI asking why it was not implementing the August 31st, 2012 order in a letter and in a spirit, and it wanted SEBI to act with iron hands when it comes to dealing with Sahara, because we are talking here about refunding close to 3 crore investors amounting to 24,000 crore rupees, including an interest of 15%. So in that regard, SEBI had tried to explain its point of view, saying it was not easy to do things when it comes to with such a huge investor base. Documents and data were not in place, and also attachment is a very complicated process. But nevertheless, SEBI has finally taken a tough stance and has initiated the process after waiting for close to 2 to 3 months. So it will be interesting to see, because the Supreme Court on its part has already issued a contempt notice to Sahara and sought its reply in 4 weeks' time. And on the other hand, SEBI now is taking cognizance of Supreme Court order and acting tough on Sahara. So it will be interesting to see how things pan out. But yes, it's for some tough days ahead for Sahara and group companies involving market regulator SEBI.
Tough days indeed. Thank you so much, Vijay, for all that information. Well, Aditya Birla Group's flagship company, HINDALCO, announced its earnings earlier today. Let's go across to the management for more details.
The Q2 and EBITDA went up by 39% over the previous quarter. Sequential improvement is there both in aluminium and copper, and as a natural corollary, the whole company moved better in Q3 over Q2. Cost pressures and some of the impacts that we had in Q2 during the monsoon months continued in October and November. Towards the end of the quarter, we started coming out of that, and the input cost pressure continues. You will see some of the impacts of that in Q3 results. Copper business compared to aluminium did significantly better, and EBITDA continued to move up. If you recall, at least some of you, that one of the roles that copper business is supposed to deliver is its conversion business should deliver a buffer action because of the volatility of aluminium business. We would call upon copper business to deliver that cushioning effect. So, in summary, it was a strong performance in very difficult times for the industry as a whole. Next. Now, some numbers. I will give you the Q2 followed by Q3 and then the change in percentage terms. Net sales went up to 6,872 crores, which denotes an improvement of 11.5% over Q2. EBITDA went up to 582 crores, which is almost 13% improvement over the previous quarter. EBITDA moved up to 900 crores, which is equivalent to 39% growth over Q2. PBT at 543 is 21% improvement over Q2, and profit after tax at 434 is about 21% improvement over the previous quarter. Earning per share at 2.26 for the quarter is an equal and commensurate improvement over the quarter 2. Q3 FY13, I would like to add, includes other income of 318 crores against 132 crores in Q2 and 92 crores in Q3. Therefore, you can see that other income has shored up our overall results. This happened on account of an enhanced average treasury because of the financial closure, and we clawed back some of the equity that we had invested in Aditya. Our treasury moved up, along with some non-recurring, one-time nature earning. So that is the financial performance for the quarter 3, and I'll be very happy to answer questions when the presentation is over. Next. Important thing is not only that Q3 did better than Q2, I have chosen 2 parameters. You will see that the encouraging trend of continuous improvement has been maintained quarter on quarter. Taking sales and EBITDA, quarter 1 was 6,000 crores in sales terms, went up to 6,164 in Q2, which has now touched 6,872 crores at the end of 31st of December 2012. EBITDA moved up very smartly from 463 to 515 to 582 crores. Next one, please. That's about the company. Let me touch upon each segment separately, starting with aluminum. First is the smelter operation. Smelter is what produces aluminum, finally. We had quite a few disruptions, both in Renukut and Hirakud.
Well, let's go across to Yatin Mota, who's standing by. Really, a low tax rate and higher other income boost M&M's profits for the third quarter, but margins are the big disappointment due to lower than expected realization. And Yatin Mota is here with all that detailed number crunching. Yatin.
Well, absolutely. We have the operating performance of Mahindra & Mahindra on a standalone basis quite lower than what the analysts were anticipating. We were working with a margin number of close to 12.1%, and the margins for Mahindra & Mahindra came in at 11.2%, almost 100 basis point decline coming in versus the estimates. And on a year-on-year basis also we saw similar kind of decline coming in. As far as the sales are concerned, the sales came in at close to 10,800 crores. The profit for the quarter was close to 836 crores versus our ET now poll of close to 860 crores. The profit was slightly higher, versus what was, anticipated because of the margin fall, because of lower tax rates, as well as because of the higher other income that the company had posted during the quarter. Also, we had the management which sounded quite optimistic for the coming quarters because we have the macroeconomic side which has been quite encouraging. The management is of the view that the demand outlook for the UV segment as well as the tractor segment is looking up going forward. Also, we have the government which is working for restoring the confidence as far as the business environment and the consumer sentiment is concerned. So clearly, the outlook as far as the Mahindra & Mahindra volumes are concerned on the tractor front as well as on the SUV and the UV front is quite optimistic, given the fact that the interest rate cut has also come and which is expected to get lower and lower going forward, and that is why the management is sounding quite optimistic. However, we had the operating performance which clearly missed the analyst estimations.
For the auto business, we had two launches, not during the year, during the quarter from last analyst conference to this conference. We had two major launches. One was Rexton and the second one was Quanto. Quanto is doing very well. We have sold about 12,000-13,000 vehicles and we have wait list of more than 1 month. On the tractor side also, we have had two launches during this period. A tractor called 255 and 595, and both of these will help us to increase our share in that segment of the tractor business. What is kind of stabilizing for us, though we don't talk too much about it, is agri business, that is farm business minus tractor, where now we are steadily going up in terms of the overall growth of that business, and this year we will end up somewhere around 300 crore coming from the agri business.
The markets continue their downward spiral, with the Nifty slipping below the 5,900 mark in intra-day trade, while the Sensex loses nearly 100 points. IT stocks rally on the back of positive guidance from Cognizant, while cement stocks slip. With Megha Chadda is here with a wrap of all the action in the trading room. Megha.
If you look at the sectoral momentum for the day, it was the IT pack as well as the capital goods pack that managed to end the day in the positive zone. So we had a TCS as well as a Wipro adding on a good 2% thereabouts. However, on the losing side, there were a lot of names that were dominating here. We had metals losing out, FMCG didn't have a good run, as did the PSU banking lot. In fact, if you talk about metals, we had the likes of a Sasagoa that lost about 2.5%. We had, Cipla also losing out quite heftily. Reliance Infra as well wasn't spared either. A lot of earnings reaction as well coming in. Yesterday, of course, we had ACC and Ambuja that declared numbers after market closing, and it definitely, both those companies managed to disappoint the analyst community, and we had a stark reaction coming into both those names today. In fact, remember, for Ambuja Cement, CLSA also cut the target price to about 218 rupees from 225, and this one lost out a hefty 5% in today's session. Not just that, in terms of the earnings for the day, we had in Mahindra & Mahindra losing out close to 2.5% on the back of margin disappointment. HINDALCO, despite the fact that the numbers were in line with the estimates, the high beta nature of the company really and the stock took it lower as well. Sun Pharma managed to end the day relatively flat, despite the fact that the earnings were quite positive. In terms of some of the other broader names that one needs to focus on, we've got an India Bulls Financials. Remember, this was our exclusive story yesterday about the block deal in the company. And on the back of that block, which was at a hefty discount, this counter lost at about 5% and Kingfisher Airlines as well. Remember, this counter has been in news, and over the last 3 days, it's lost close to 17%. And today, this story was no different.
Well, thanks for all of that, Megha. Let's move on. Following a top management rejig, telecom firm Bharti Airtel has announced a new organizational structure for India. Akhil Gupta says this will help the company meet new challenges. For telecom, he sees tariffs going up due to input cost pressures.
Fundamental change is that, of course, there is a change of guard at India. And the other change is that we have put Bangladesh, Sri Lanka, all international under Manoj, besides Africa. So other than that, they both report, the Indian CEO and Manoj as international CEO report to Sunil. So that's the same. Industry has been going through a huge amount of pain. The financial position of the telecom companies is very clearly for everybody to see is not very healthy. There is huge burden by way of spectrum fee, this one, the diesel cost. Input costs are increasing like mad. And therefore, obviously the big challenge is that this industry has got to get the realized rate up. There is no choice. Because if the companies don't do that, there is no hope. So that's a challenge. Data is an opportunity, big opportunity. I would say we are pretty satisfied with the way it is growing. And our feeling and looking at what has happened in the world is that these are the things which take a hockey stick effect once it comes to a certain ecosystem. I think India is fast going towards that. We'll see more and more growth on data.
As you said that realized rates have to move up, are we looking at an era now of tariffs going up maybe more than once? And what are the kind of tariff hikes that we're really talking about here, sir?
Well, I don't personally believe that you have to do a huge amount of change on the rack rate, because unfortunately the rack rates have lost meaning, because there is so much of discounting underneath. But promotion, the free minute, this freebie, that freebie, the whole industry has gone into a tailspin. And I think first and foremost, if I look at part A of this exercise of increasing realized rate, there is no option for companies but to get more disciplined and see that before increasing the rates, can we take off and rationalize all the freebies which we are giving. We have just no scope for giving those. So that is the first step. But the way the input costs are going up, I mean, not unthinkable that even the fundamental rates need to go up over a period of time.
Well, good days for consumers like you and me are clearly over. We learned from sources that Mohan Parasaran will be appointed the new Solicitor General of India, and the official announcement will come from the Law Ministry next week. Ashwin Mohan, who broke that story, is here with us with more details. Ashwin, over to you.
That's right, Sonali. In fact, India will soon have a new topmost law officer, and what we understand from top-level government sources is that the man that has been selected for the post is the current Additional Solicitor General of India, Mr. Mohan Parasaran. We understand that the government has taken a final call to appoint him as the new Solicitor General of India. We also pick up from sources that the official announcement is likely to come in from the Law Ministry sometime next week. So sometime early next week, we can expect an official notification coming in as far as Mohan Parasaran's appointment is concerned. Now, keep in mind that this entire post of Solicitor General has been rather controversial in the recent past, because the previous Solicitor General, Rohinton Nariman, was reported to have resigned because of differences between him and the current Law Minister, Ashwini Kumar. The entire UPA government's regime has seen several law officers quitting in protest. Rohinton Nariman was the fifth law officer to quit in protest during the entire UPA regime. So therefore, this post of Solicitor General has been a rather sensitive post. What I understand, though, is that Mr. Mohan Parasaran's background as far as the Reliance case is concerned, the Reliance gas tussle case is concerned, and also his handling of the Vodafone tax case worked in his favor. Keep in mind that he led the government to victory at the Bombay High Court as far as the Vodafone tax case is concerned. So clearly, the government seems to have made up his mind. India will have a new Solicitor General, and we can expect an appointment, an official announcement, in fact, coming in sometime next week. And Mr. Mohan Parasaran can be expected also to represent the Indian government in several other high-profile tax cases. Keep in mind that Vodafone and Shell are waiting to file writ petitions against the government, and therefore the government is likely to take the advice of their new Solicitor General once those cases are filed. So Mr. Mohan Parasaran is the topmost law officer of the country. That's the news coming in from top-level government sources right now, Sonali.
Well, thank you so much, Ashwin, for that. And, you know, of course, we will get back to Ashwin when he gets more details on, you know, how Mohan Parasaran will take office and when that announcement will be made. But that's the ET Now exclusive from Ashwin Mohan. Let's move on. Amid a very strong buzz that the RBI may issue norms for the new bank licenses as soon as today. Speaking to reporters earlier today, RBI Deputy Governor Anand Sinha says that the process of consultation between the RBI and the Finance Ministry is on and that the norms will be released very soon.
When there is consultation, obviously you have to take into account the other side, their viewpoint also. We will come to a mutual position and then issue.
How soon will that be?
Very soon.
Banking license draw as the final guidance.
As I said, quite soon. No, that mutual consultation is always there. So that process is on.
And on to some international news. The European Union moves closer to a historic pact on budget cuts. This agreement comes after 15 hours of through-the-night negotiation, laying the ground for 960 billion euros of spending. British Prime Minister David Cameron, who had sought steep cuts, claims victory after the European Council President proposed a £34.4 billion sterling cut over the next 7 years. And with that, it's a wrap on the show, but keep it right here with ET Now.